We will be able to handle lots of responses today. People want us to focus on that. We analyze the time frame we have and then the feedback we have from people, and realize that if we have to start that afresh, we will end up spending maybe an hour or more doing just that, and we'll be able to point out other very important areas we promised to share with us. So I'm leaving here now. I'm going back to the same chart of account. Okay, so on this chart of accounts now, I want to inject funds in an account that is empty. And remember, we have 50,005 on that balanced account already. Let's take it that I've started the setup, and that's the balance we have as at that point. So I want to inject fund into the system. Maybe a bank. I'm going to create another cash in that bank. And that cash in that bank obviously was the cash that the director deposited. Used to have just two banks, cash on hand, which is a form of bank, not statutory, and then the statutory bank. So I'm going to create a third bank, Chase Bank, as though I'm setting the first time. So in order to do that, usually when you set up your company on QuickBooks, the system based on the information you provided will give you a draft balance and the records will be 0. Now it's now your responsibility to impute value gone ahead before now. I will create a new account. So here at the top right side, a new account. So here at the top right side, I click POS in the Chase Bank. Okay, familiar with that Chase Bank. So what type of account is Chase Bank? What type of account is Chase Bank? So Chase Bank is a kind of cash equivalent. Cash equivalent. So cash equivalent to our bank. So Chase Bank is an asset. Any money in Chase Bank is an asset. The specific type of asset is bank, and bank falls on that cash equivalent. So I'm selecting that, and here you can see the detail is the bank. Now because I want my report to have this Chase Bank as just written fall directly under or as a sub cash equivalent, I will click this drop down tab here, and then select parent account. Under the parent account, don't unlock it. You won't be able to save, or if you save what just the account you create will not align accordingly. So I have just created Chase. Now I created Chase Bank, but no value on it. There's no value. So that's exactly how when you set up or you complete your initial company setup on QuickBooks. Usually that's the thing done in a few minutes, maximum 5 minutes, 10 minutes, depending on how much your record, how company detail, your phone number, email, website, all those records have them account. So it's not supposed to take a couple of minutes to set up. But even if it extends beyond that, it's most likely won't go beyond 10. So we take it that I've just completed all the company setup initially. Now we want to use Chase Bank as a reference on how to use the records on our balance management or integrate. So what you do is that you come to the respective account. In which case first set it is believed that all the you can see the Chase Bank we created, the value here is 0. Because the value is 0, so that's part where so and see if I can do this from the register. Okay, so we have Chase Bank. This is Chase Bank, and I double click here. and it comes over to the register. And right on the register, let's see. All right, so just click add deposit. So the value on Chase Bank payment. So the deposit value. Let's take the date. Let's see if it's going to. This is an opening. Normally, you shouldn't. When you are setting the account up, the first time is the best time to do that. So, but if you had set up the account initially and it has a zero balance, just the way it did there, then this is where you need to come to, and then impute your value in deposit. Put in the date. The date must always be your last year date, your accounting year, the previous accounting year. So in this case, let me say 31st December 2025. That's the previous year closing balance for this company. You can put on your memo closing balance, just like this. So let's say closing balance, okay, and the memo closing balance, and then you move on to the value on that deposit. So it's 10,000. 1, 2, 3, and press start. So that's 10,000. So that's closing balance for year 2025. It's already there in the date. Closing balance as at 2025. 2025. As at 2025. Closing balance 2025. So before you leave again, it's important to take, like I said, best bet is not to set the company. Best bet is not to and then come here to set that. It's only if you've done that, come here to do, and you need to go to the ledger or the register. It's only if you've done that when you're setting your balance sheet. Best bet is that time you're setting up Chase Bank. Build the balance and build the date. Maybe I'll just do one more. Then also can see the difference between that and that. And so I'm clicking. Something's missing. Okay. So the 10,000 in question, it must have a receiving account. Remember I mentioned that 10,000. Though isn't it belong? Its money is a share capital or anything that one of the direct organizations used to set up. So for that reason, I have to select. So for that reason, selecting the account to select allows you to complete the process. You can fill in other records, other details if you have to, but in this case, I just want to save us time. So this 10,000, came in from one of the directors, and it was used whichever the case apply, but somehow the balance sheet if it is the balance as at that time, maybe one of the directors is injected funds at the end of the year, so carry it over in the whichever applies, have it on your balance sheet. On the balance sheet usually gives that record. That's why it's important to use the balance. Just print it out on your Excel, PDF or a PDF. If it's a PDF copy, you might need schedule in the sense that your receivables and payables might need get details receivables, who is owing, payable, who you are owing, and then your inventory assets, the respective inventory and their value as at that closing date. I hope that is clear. Okay, so let me go back, return to the report, and let's see what the difference is going to look like. And I want to look at standard reports. I want to look at standard report balance sheet. And under the balance sheets, I'll collapse. Under the balance sheets, if you're looking at it carefully, you would have seen the difference. Remember the last time the difference. Remember the last 50,000. It was 50,000 and $5. Now we have $60,000 and $5. What's the difference? If you look carefully, difference is in the bank cash and cash equivalent. That was 5,000.